Hello, today is Sunday. It is February 26th, end of the month here. It is 6:46 in the morning when I get a video out to you. The weekend report is titled The February Stock Market Blues, and this is your market report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author Jonathan N. Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice. It is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, we're keeping clients aware of what is happening, what we're seeing, giving a vulnerable, whether we're doing well, whether we're struggling, what the market's doing. Let's hit the charts. Okay, so let's first start with the performance. It was a tough week. If you recall last week, what we wanted to see was the market hold 41.17. We wanted to see number one, 40.80 hold. Okay, so last week, again, Monday was off. For some reason, short weeks have been very, very difficult. I don't know why that is, but in my last 2 years, it seems like we just get smacked on short weeks. I don't know why that is, but it's just the way it is. I don't know if there's a correlation there, but regardless, it just seems to work that way. So last week on Friday, we were holding overnight, meaning we had positions on, things looked to be encouraging. You can see this candle right here. We were testing the 21-day moving average. We were still above it. We were still kind of right at a 5-day moving average. So we decided to hold, knowing this. A lot of people don't know this, but most of the gains actually occur overnight. So this is since 2012, but if you go back throughout history, the returns are even better. So the blue line is the night performance versus the intraday performance. If you go throughout history, holding overnight is usually the thing to do. But what's been interesting, if I go here, this shows you the night move, the night moves. And as you can see, since February, for some reason, this trend has not been taking action. And obviously, here's the big gap down. So we wanted to see last week us hold 40.50 and 40.65. And those levels were unfortunately lost, of course, when I can't trade. That was very, very frustrating. So you have to react immediately right after that. We lost 40.50, as you can see. So this gap down, there was nothing I could do here. We gapped down and just kept going lower. I got out at 4,004, thinking that, hey, this unfortunately will probably be a magnet to the 50-day moving average, which is this blue line right here. Okay. And we actually went even lower. We tested the 200-day moving average, which is not a good thing. Okay, we tested it, we bounced. That's a good thing. Think about this from an emotional standpoint. Okay, terrible year last year for most equity and bond investors. That's what I want you to understand. When the market goes down like last year, there's really no place to hide beyond shorting and being in cash. My performance last year was not necessarily as bad as it. At one point, we were beating the S&P by 20% because we were in cash and protecting. I decided to short, and in about 2 weeks, that was quickly the wrong move. In 2 weeks, we were down about 6% year to date last year and went quickly down to 20% because we were short in this move right here. Okay, so it's unfortunate, got to move on. But we actually had bad performance last year, not because we were being long equities, but because we shorted at the wrong time. So I was trying to protect your portfolio. Regardless, we have a lot of gap downs that will eventually probably be tested on the way up. So we're at a pivotal point here. What I want to see, and we'll start the timer so you can see the different levels that I'm watching now. We need to stay above 39.80. We're right at 39.70. We haven't recaptured any key levels. Here is the downtrend. Here's the trend line, this triangle right here that you're seeing right here forming. We're at a confluence point, okay? We bounce off the 200-day moving average Tuesday on Friday morning. Thank goodness I was in cash. But we did bounce. We're seeing a lot of night moves get hit and during the day recover, which is usually, it's very opposite trend, but the trend is still down because we're below a 5-day moving average, as you can see this orange line. But there's another gap in here at 40.50. But in short, think of the emotional side of this, okay? You receive your year-end tax statements, okay? Or many people check their performance usually the month of February for the year prior because of tax season. They see how they're doing. They see sticker shock, and almost right on cue, this is Ryan Detrick, always good stuff. This tends to happen. They force advisors to sell, and that's why I'm protecting right now, because I think this could lead to a little bit more downside, scare the crap out of everybody get incredibly negative, and hopefully we kind of hover above 3,900. I think 3,900 unfortunately could be tested, but we do have a big gap here which could be tested. If we get above 40.23, as you can see right here, 40.23, this needs recaptured fast. And if it does and holds, I think the low will be in. If it doesn't, I think 3,900 will be tested. And I'm going to trade based on what I'm seeing. It's very odd that on Tuesday morning at 4 in the morning, we finally get the media telling the story of what's happening in Ukraine. I don't know why they decided to publicize that now. It's been going on for a year. But Putin had a speech that tanked the market. I got out as soon as I can. I have to concentrate on what I control. I could not control that, but I got out as soon as I could. I got out at 4:04 because I need to see if buyers are going to come in that day. They did not that day. So I got out, and fortunately I was out the Friday move because it went down. This was down on Friday 1.7% and rallied toward the latter part of the day, which again is kind of what's happening. You die overnight, recoup during the day. So an inverse trend at what is normally happening. So it's difficult. It's extremely difficult. We're getting 3% moves a day. It does not mean that you can't make money in this environment. It's just, I think this is going to scare everyone out. Everybody, think of this emotionally. Everybody is on the chopping block, okay? Investors are on the chopping block. I can tell you by the phone calls that I receive that everybody's on their last nerve. If it goes below this certain level, they're out. And I'm telling you that is usually a sign of a bottom. But I'm in cash right now protecting. But we'll see. We have to get and close above 40.23 to really feel confident about that. So here is the triangle. Here's the confluence right here. Everything's bulls versus bears. This could go sideways for a while and drive everybody nuts. If you are completely tapped out, we can talk about T-bills because they are earning a decent rate. But I think we got to be careful because if we lock in too long, I think you're going to miss a rally. So below 3,900 risk reward is very, very good, but we got to make sure this doesn't tumble. So overall, those are it's a difficult market. Like, you can't do anything about a Putin speech at 4 in the morning. I can't trade till 9:30. You know what I mean? So a lot of people don't fully understand that. So regardless, it could be difficult through early March, and I'm hoping that people completely freak out and we get better entry points. There's going to come a time, as I stated in my weekly reminder, that there's going to come a time where I'm going to force 25% invested regardless of what happens because the risk reward is improving. But let's take a look at some of the other charts, okay? Sectors for the week. XLB is definitely stronger. XLE as well. We talked about this. Let's look at XLB real quick. Materials. More of an inflation play. You can see it tanked but recovered right back to the 50-day moving average. Something to watch here. This is definitely showing more strength than a lot of the other sectors. XLE, energy, kind of in no man's land. XLB is stronger in my opinion. Let's look at what else we need to see. McClennan index. This is not what you want to see, but objectively, you do not want to see this roll over. I was saying last week that this can roll over and that stock markets still do well, and I think that could still happen. But this is, I want to see this go a little bit lower, but the market doesn't care what I want to see. But at the same time, usually it does. Like anytime you get overbought like this, and it's trending below the halfway point, usually it does go at least to 30. So we'll see. Human emotion doesn't change, as stated in the weekly newsletter. People are freaking out, and rightfully so. I'm not taking lightly that account values are terrible right now. But when you least expect it, when the news is hitting the fan, it's terrible. This thing's going to turn, unfortunately. So let's take a look at this. This is on the concerning edge. This is the spread between the 10-year and the 2-year. You do not want to see the spread go below 0. And it has been. We're getting huge bounces. Like, for example, like, look, the month of January was fantastic. Okay. Huge upswing. Breadth was strong, as you can see here. Now we're waning a bit. And so what we want to see here is we want to see this curl up. We want to see this bottom out through here. I think it could be a frustrating through early March. I want to see this. I want to see this cupping right here and hopefully go higher. If not, I'm still in cash, so we're protecting until we can actually recoup a key level. Okay, so let's look at the other things. McClennan, MDY. This is mid caps. Mid caps are interesting here. That's holding up better, but still not a pretty picture. It's holding up better than the other indexes, but again, not pretty. What's VEU doing? This is the all world index. Not a pretty picture. You got to be careful. QQQ, what you want to see do well is the NASDAQ 100 stocks in no man's land. So you can see why I decided to be cautious here. There are opportunities. If this bases, you have to understand, if this bases right here and you don't have some in, you're going to miss a rally. But again, I think we need to get above this downtrend line, this bull flag type trend, to be able to get moving. The good news right now, objectively, is that we are very far extended off of the 5-day moving average. So usually when you get a huge swing down, it usually balances out and often can retest the 5-day moving average. And that's kind of what I want to see is there a little more buying opportunity just because the put call ratio is still pretty high. The put call ratio is 0.82. So could this squeeze shock people over the weekend saying everybody's negative? Could this go a little bit higher, get people off sides? The 50-day moving average is a trend for many people. We're right at it. So 3970 is where we're at. The 50-day moving average is 3980. Would it surprise me to go to 4,000 quickly? Not really, to be honest with you. I think the market has a way of getting people off sides, and I think many people are off sides right now, potentially to the downside. I'm in cash because we have no signal to be in because we're below the 50-day moving average. Again, I'm sorry this is happening to you. Account values, there's only so much you can do when you get a headline at 4 in the morning. I really dislike short weeks. I'd rather have the market open on a Monday because there's nothing you can do in a situation where the markets actually went down on Monday. I know the market was closed, but the market was down. It went directly to 40.67, which was a caution area for me. So I could have made some adjustments there, but you get this huge gap down like this. It's very difficult to manage. So the summary is this: don't let your emotions get in control of your mind. I know you look at account values and there's a line in the sand. It's usually the worst thing you can do. We can manage through this in terms of bringing on somebody, the top 1% wealth manager. That is coming very, very soon. So when I'm not doing well, I'm going to be real about it and get some help. And I'm definitely doing that. But the reality is some of these moves I have zero control of. That was against trend. Usually this does not happen. I mean, I'm owning up to the fact that I have not been doing well. And so I'm getting help. And many people are like, well, I'm just going to change advisors. That's fine. You have the option to do that, but you're not going to find one for better than the one I'm bringing on, period. So when I'm not doing well, I'm going to get the help. I'm going to find somebody better than anybody you're going to go to. That's just the reality. So you have the right to do that. I understand it's going to be great, but also understand that many other advisors are going to put you in situations that make you feel good rather than giving you the reality that if you go to those conservative areas, you're never going to get your money back. That's the reality. You can short term go into guaranteed areas, but you got to make sure you're not getting locked in for a full year and could potentially miss an entire rally. So I'm happy to have those conversations with you. I want to give you the real conversation rather than scare you and make you feel great about yourself overnight. You know what I mean? The general trend is always up, but right now you got to be cautious. So hang in there. I know the emotions are difficult right now, but again, from an emotional standpoint, understand that this is a real thing. People look at their statements end of February. I guarantee a large portion of clients will tap out. And the reality is, unfortunately, that's probably when you get close to bottoming. As always, we're going to follow price action, but thank you for your trust. We're getting close to bringing on that wealth manager. There's some good things. We're kind of at a sticky point here. There's some good things that could still happen here. We could get through it, but at this point, there's no reason to be pressing. Last week, it looked like we were going to get out of it. I don't know why the news headlines started publicizing things about things in Ukraine. It's been an issue for a year. So it's kind of weird how that works. It's almost like they're trying to get people out before the next move, but that's how things work. So thank you guys. Have a great weekend. See ya.